a.m. here in Lagos. Thank you for joining us. This is Business Morning. I'm Ladi Williams.
And I'm Ini John McCran. Good morning and welcome. Well, we start off with top business stories. Nigeria's foreign exchange reserves fell by $640 million to $34.24 billion as at May the 28th. And that went from 34.88 billion naira as at April the 28th. That's according to latest figures obtained from the Central Bank of Nigeria. The external buffers dropped $178 million to $34.82 billion as of the end of the 31st of March. And that dropped by $1.1 billion to $35.09 billion as at February the 26th.
All right. So there is a need to have an effective continuous governance in achieving economic growth. And that's the view of stakeholders at an advocacy program organized by the Institute of Chartered Secretaries and Administrators of Nigeria. Speaking at virtual events, former Minister of Industry, Trade and Investment, Mr. Olusegun Aganga, says Nigeria needs to adopt policy sustainability approaches in meeting the set goals for economic prosperity. Do take a listen.
Effective national planning, governance and economic growth, all interconnected. These are all fundamental issues that need to be addressed. This is what these stakeholders at a new advocacy program of the Institute of Chartered Secretaries and Administrators of Nigeria believe will guarantee the much-needed growth. The Institute is kick-starting this conversation to proffer solutions to these multifaceted challenges left unattended to by successive policymakers.
There is the need for us to go back to the basics to ensure that we connect these key concepts together, that we put in place strong national planning that is future forward-looking, that is realistic, and that has to be implemented by successive government, not a government coming to play to say this is our own policy. We have one country, and we must run it as such.
Micro level, it is down.
A two-time minister in Nigeria, Mr. Olusegun Aganga, believes that the current challenges facing the country are due to a lack of failure to identify the root cause after over 50 years.
Having resources in the ground, finite resources that, are wasting assets, it does not make you rich as a nation. Having oil in the ground, having solid minerals in the ground, 24 solid minerals, does not make you rich. What makes you rich is what you do with that, the value addition to it. And we're still struggling with that. And that's what we diversify the economy.
Another major issue is that of insecurity, which is believed to emanate from the inability to address the three fundamental issues.
Just a matter of propelling the economy again, so that the economy can be stable and can be prosperous, and then the relevant stakeholders will have something to do so that this insecurity will become a thing of the past.
Amidst all of these, what is the way forward?
We need to do more to have leaders who have core values, values-based leaders, and we have to change that right from primary school, secondary school, university. We need to have leadership institutes, finishing schools for people leaving the university where you teach them about leadership and values. So you need to have a system in place that we produce them in greater numbers.
With the solutions proffered, Nigerians have been asked to get involved and add value to achieving the much-needed growth across the country.
And oil prices rose for a third day today on expectations for a surge in fuel demand, particularly in the United States and Europe, as well as China later this year. At the same time, major producers are maintaining supply discipline. Brent crude futures were up 0.7% at $71.84 a barrel, the highest since September 2019. The international benchmark gained 1.6% yesterday. On West Texas, intermediate crude futures rose 44 cents to $69.27 a barrel. Prices earlier rose to as much as $69.32 a barrel, the most since October 2018, after gaining 1.5% in the previous session. OPEC Plus data shows that by the end of the year, oil demand will be 99.8 million barrels per day versus the supply, which is projected to be at 97.5 million barrels per day. This rebalancing will be led by resurgent demand in the United States, the world's biggest oil user, from vehicle consumption this summer, along with rising fuel needs in China, the world's second biggest oil consumer, and in the UK as it exits its COVID-19 lockdown. Well, oil has been headlining the news for days now, especially after the decision of OPEC Plus to gradually ease production cuts. Bolanle Agbaje, a research analyst with financial derivatives, joins us now to discuss the implication on our economy and, of course, the commodities market. Hello, Bolanle.
Hi, good morning.
Good morning.
Good to have you.
Good to have you
Those
again.
are big demand numbers there.
Yes, very, very high,
Yeah.
very high demand there. So with all of this happening now, bringing it back home to us, and then we have, this morning, over $71 a barrel. That should be good news for us, right?
Yeah, so that was, it falls in line with our realistic expectations of, oil reaching at about $72 per barrel because of this, new initiative by the OPEC Plus. We predicted that they would ease on this output cuts, and which is what they did, although the volume was much lower than what we had expected. I guess, they're trying to be cautious at the same time and, kind of understand where the market is going. They're optimistic. What you had already read this morning, there's an excess of about 2 million barrels per day when it comes to increased demand versus supply. So what they expect is, they're going to cut outputs, or each oil country would cut output in June by about or increase output rather by about 350,000 barrels per day in June, and then about 441,000 barrels in July, which is great. It's falling back to, our home. Anything about oil is good for us. We had seen it earlier this week that, remittances from the NNPC is more or less zero for this month, and it's not really great because landing cost versus, the pump prices, there's no significant difference, and they're not making, any profit or increase in revenue from this. Yeah. So it's great for us if we have to increase our, current production
But everyone
levels.
is bullish on oil, at this point.
Yes.
Could there be some kind of surprise?
We can always, we always have to still prepare ourselves for the worst. Yeah. I think the worst that could happen is for, oil prices to, change its course. I don't see any, or, the deal between the U.S. and the nuclear sanctions, there's something different that happens. But I don't think, we don't have a governance, in the U.S. that gives that surprise element. I think everybody can predict, what Biden's administration would do. I don't think they will do anything that's so drastic to the system. So if they, release these sanctions, there'll obviously be increase in supply from Iran. But I think OPEC Plus has already factored that into, and hence the reason why they're not, increasing supply by huge amounts.
But on the flip side now, it's good for us that it's a realistic projection at over 71. Yeah. But it's also for us to pay more, to import this into the country.
Well, yes, but at the same time, whatever crude that we sell at that price is still huge. And the fact that, as much as you're increasing or prices are increasing, oil production is also increasing. Currently, I think our oil production is about 1.56 million barrels per day. If we can increase that to about 1.6, 1.7 million barrels per day, it obviously, adds something to our, external reserves.
Okay. So will that help with our remittances that is currently going down and bringing a lot of...
It would most likely, help, but I don't think it would help this month. Most of these implications, you usually see them, there's usually a lag. And then, so from June, July, we should, July, August, we should start seeing a difference in, our oil revenues.
Okay, but I see the oil export revenues down by 98% to about 723 million in April.
In April, yes.
Will this change anytime soon?
Yes, so like I mentioned, with these changes in the increases in oil prices and, our production should obviously change that. That 98% difference was between the month of March and April. And if you look at oil prices, I think average oil price in the month of March was about $65, $66 per barrel. And then in the month of April, it fell to about $64, $63 per barrel. So that obviously,
and we still have the issue of big oil players divesting, from Africa. Is Africa ready for this?
Well, I guess it should be ready, because we also have other agricultural products that we can, fall back on. I think, most people, after this whole COVID situation, most countries are also thinking about, the global atmosphere, global warming, climate change, all of that, because you don't want to be taken by surprise by natural occurrences. So I think, most countries are working on moving towards sustainable energy, renewable energy that, is cleaner energy for the environment.
And I'm trying to imagine a world where we now have, electric cars, we won't have filling stations anymore. So is that
but you have charging, you have charging stations.
You have the
stations.
A lot of countries have already adopted that. It's just that, we don't have, I guess it's quite expensive at the moment, just because, you're still having limited supply.
I know
the
UK, UK, some companies are actually investing in some of those.
Yes. So by the time it gets to a point where, the average individual in the economy can afford an electric car, then I'm sure that it would be, a step.
And the electric cars are supposed to be affordable too.
They're supposed to be. Well, one thing that worries me when we see the good news on global oil prices and all that, it seems that we back here in Nigeria kind of relax. We don't push for the diversification of the economy. We don't push to develop our agriculture. And we talked about solid minerals the other day. We don't push because now we have what we can take care of today, and we're not planning anymore.
I don't think it's a matter of not pushing. I guess they're trying their best. The government is actually working, tirelessly, because at the end of the day, it benefits them in the sense that, they have all these plans that are made, and, they need funds to actually push these plans, reforming the educational sector, reforming so many sectors. So I don't think it's a case of them relaxing. I just think in Nigeria, there's just a problem with implementation of some of these plans that we've made, and I guess maybe they don't understand the more efficient way to actually get these plans, rolling out.
All right, let's look at the Sugar Master Plan. Still a discussion of interest. The country could earn about $700 million a year from sugar backward integration. Are we on track here?
I guess, it's something, the companies that are ready, like Dangote, to, tap into this, policy. And it's obviously a step in the right direction for, Nigeria. But I'm sure that, the fact that we're talking about this, a lot of the government officials are probably looking into, making sure that this sugar, because who doesn't want to benefit from extra $700, million? It's a huge amount.
But I'm just thinking, when we talk of refinery, we mentioned Dangote. Now we're talking of sugar, we're mentioning Dangote. Isn't there a way?
It's monopoly.
To spread it, even if for smaller corporates, to get into the show and also push some of these things and benefit from it and help the country at the end of the day.
Yeah, when it comes to the backward integration aspect of it, it requires huge funding. Factories, it's capital intensive, and I think that's the word. And when you're talking about anything that's capital intensive, you're talking about money. And some of these investors or potential players in the market, they struggle with these funds, especially now that most people, the disposable income is squeezed. Companies are struggling with higher costs. So I'm sure at this point a lot of companies are not really looking towards investing in new aspects or new projects. The CBN has talked, mentioned several times that, they have these particular manufacturing funds that, would support the sector. But I guess, the process of getting some of these funds is quite
actually,
tedious.
the government does have a role to play, tax relief funds, and then cutting out the red tapes and bureaucracy to attract more corporates to go into the business. I mean, if we have $700 million pumped into our economy, I think some of the threats to strike and minimum wage and all that would also reduce.
It will.
We still have that spending problem, though.
Yeah, like you mentioned, there's so many aspects to it. It's not just, you know, a straight line. There's so many corrective measures that need to be in place when it comes to, you know, and also I think Nigerians, we lack the word trust is a problem, and I guess that's why you have all these, you know, hitches in different places. You know, you cannot really trust the fact that, you know, some of these investors will actually, you know, get your money back. I guess that's, you know, the problems that most of these banks have with releasing these funds.
Okay, let's look at rising U.S. inflation. Now, it seems to have an effect and impact on the commodity prices and material shortages. What's happening in that count?
So what's happening is that inflation currently is transitory, which means it's kind of like, it's not the fact that it's persistent like we see in Nigeria. So what happens is the fact that, you know, you're seeing a situation where we have moved from the issues of supply bottlenecks and, you know, when you're seeing that economies are changing, you know, or transitioning from that aspect, you actually see inflation moving in towards that direction. And I guess the Fed is not so worried about, you know, the way inflation is playing now. I guess they are allowing inflation run above the 2% target currently, just because, you know, the inflation is only transitory at the moment. You know, the labor market is still, you know, kind of low. So what they've mentioned is the fact that once, you know, they're increasing the labor aspect of things and more people are spending more, then we get to a point where inflation becomes more persistent.
All right, let's look at the stock exchange now. The cumulative loss in May, 3.51%.
Yes. Well, but we had a green yesterday.
The stock market fluctuates, and, you know, it's the sentimental value that the stock market actually reacts to more. And, you know, like I mentioned, a lot of companies within this stock market are struggling. Manufacturing, like the PMI was released, and we saw like a significant, not as significant, but a decline in the value of the PMI, which reflects the fact that, you know, manufacturers are suffering with increased costs in the high inflation environment, you know, transportation costs. Those are still some things that they're battling with. And on the other hand, demand is not picking up at the moment.
And
so
companies that are commodities dependent too also.
Heavily commodity dependent. Those are, you know, they're facing it. Despite the fact that, you know, in the global sphere, commodity prices are increasing, but they're not getting the benefits of that currently.
All right, so let's go to the commodities market now. What's happening there? Please don't say it's all red.
Well, 58% is red. Okay. I think that's a better way to say it. 58% is red. You know, we're still having, from the AFEX commodity index, this was up. You know, commodity prices are increasing. We saw the likes of maize that increased by about 2.3%, and cocoa as well. Well, cocoa is great for us because, you know, we do export this particular product, but other, you know, commodity prices are, you know, increasing or just remain stagnant.
And maize has become really popular these days.
Yeah, we do hope that, you know, the price of maize, you know, changes its course, just because, you know, we're seeing increase in supply. I think this is the season for corn, rather.
What about the agricultural commodities?
Well, the agricultural commodities, global agricultural commodities, you know, they were seeing increases in prices. Huge demand from China. China is really driving, you know, some of these prices. But yeah, it's not great. The likes of wheat, corn, not great for us because we import these products. But cocoa is great.
Good for it.
It's good for us. Cocoa is currently trading at about $2,400.
I just wish we'll get to a level where we don't have to export cocoa, but chocolate.
Exactly, because we'll make more money actually.
Yes, we'll get more money that way.
Forward integration would probably come into the talks.
It would really be nice to discuss that.
Oh, yes.
All right, thank you so much, Bolanle Agbaje, for sharing your thoughts with us. Always a pleasure having you on Business Morning.
Thank you.
Bolanle Agbaje is a research analyst with Financial Derivatives Company. We'll now take a break now. When we come back, we have more discussions for you on Business Morning on Channels Television. Just stay with us. You're welcome back. Well, after two negative sessions, the equities market closed on a positive note yesterday. Investors gained 35.52 billion naira. Well, we'll leave the figures for later when Will comes to bring us up to date. For now, we have Jolomi Odonganro, the head of research and strategy at Kodra Securities Limited. He's here to give us an overview of not just the equities, but other related issues. Hello, Jolomi. Thank you so much for joining us. Good morning. Can you hear me, Jolomi?
Yeah, good morning. Thank you for having me.
All right. So activity level in the local bourse has been abysmal for a while now. Last month, trading ended largely in the red. With this return of the bull, do you think this will be sustained in this month of June?
If you're looking at the level of activity in the market, I mean, it helps to look at the market dynamics at the moment. Looking at what domestic investors and foreign investors are doing. For domestic investors, given the weak macroeconomic environment and obviously the impact that will have on corporate profit expansion and by extension, the performance of equities, it's not surprising that these investors are very willing to stay in the fixed income market, taking yields about 14% in the bond market. And even looking at bank deposits, we have bank deposits around 13 to 15% right now. That's based on our own market survey. So it's not surprising that domestic investors aren't playing. And for foreign investors, the extent of the participation that we've seen in the market for foreign investors so far, the larger part of it has been reinvestment on dividends as they've been unable to repatriate their funds given the dollar liquidity issues that we've had in the year so far. So looking at the dynamics both between domestic and foreign investors, it looks like we may have weak trading sessions for a while still.
All right, how do you see the market closing today?
So yesterday was a positive. Obviously, bargain buying on Dangote Cement pushed the market upwards. I think right now, month to date is about 0.1% after the 0.2% gain yesterday. Like I said, right now, the negatives far outweigh the positives, and that will be the overarching theme, we believe, for the month, even if we may see pockets of gains here and there. So overall, we're still looking at a negative market performance through the month, although we expect it to be a little bit better than what we saw, minus 4% month gain for May. We do expect a negative performance, however, for the month of June as well.
All right, so fixed income yields have maintained an uptrend since the beginning of the year. When do we expect yields to reach a resistance level, or do you think yields will just keep on going higher and higher?
We think that we've reached that level, actually. If you remember, at the long end of the curve, yields were around 14.25%. This was about 2 to 3 weeks back. And ever since, we've not really seen a lot of movement thereafter. And there are a couple of factors behind this. Number one, we believe is most important, is that the DMO allowed yields to trend upwards, given the government wanted to securitize the ways and means balances. And I mentioned on the show before that looking at the cost to the government of the ways and means balance, it didn't make a lot of sense for DMO to allow yields to trend significantly above the cost of the government, which is MPR plus 300 basis points. And that was the resistance level that we saw, around 14.25%. Right now, yields are coming downwards. At the long end yesterday, we saw yields about 13.7%, already reflecting that we may have reached that resistance level. That being said, the month of June is a very, very tight liquidity month. We have almost no bond coupons and just a few treasury bills maturities, which will likely be rolled over. So given that tight liquidity situation, we may see yields trend upwards again, maybe towards that resistance point, but we do not see significantly moving past the level that we've seen recently, which is 14.25% at the long end of the curve.
Well, the federal government has been quite active in the market, and they've raised 46% of their domestic quota for borrowing. Do we expect them to remain as active in the second half of the year, considering that the expectation of about $6 billion in foreign borrowings?
I mean, looking at, so the $6 billion on the one hand will completely take away the external borrowing projection was 2.34 trillion that the government wanted to borrow, as stated in the budget. So the external borrowing leg is gone. So what you have left is the domestic borrowing leg. So looking at what is left in the domestic borrowing leg, without accounting for the possibility of the government enacting the plan to borrow from dormant account balances as well as unclaimed dividend, that puts you about a 180 billion naira run rate through the rest of the year for domestic borrowings. That's after accounting for the bond borrowing so far in the year, as well as excess borrowings in the treasury bills market. So looking at that, that's about 180 billion. The average for this year is around 200 billion. So you're still looking at a significant borrowing schedule for the rest of the year. However, if you have a point where the government does enact this plan, as well as excess borrowings in the Eurobonds markets or external borrowings, then that significantly reduces what you expect in the domestic market, which, on the other hand, will now cause yields to start to decline, given the supply and demand imbalance that would present therein.
All right, on the FX loans, now what is the status of the Eurobond issuance and the multilateral loans?
So, as you know, the president has pushed it to the Senate to approve that borrowing plan. Yes, it was in the budget for the year. However, the Finance Act 2020 does require the government to then seek approval for those external borrowings. So we're looking at some point through the rest of the month, we'll see that happen. And from that point, it could be a very, very quick transition of movement from book building to actual issuance of debt. And looking at Ghana, that pretty much did this in a very, very sharp 2-week period. It could be very, very quick from approval by the Senate to actual borrowing, especially from the Eurobond leg, given how quick that market can be. So we do expect most of the borrowings to be done by the end of this month or the beginning of July.
Well, the turnover at the INE hit a year high of $472 million last week. What factor or what drove this?
I mean, looking at the fact that the largest supply in our market is the central bank, and the fact that the government is, I mean, a lot of these things are tied in. The government is now looking to borrow $6.1 billion. You can understand why the central bank may be more comfortable with now reducing the latent demand in the market. At one point, this was about $2 billion. And very recently, they've been extending about $25 million weekly, and now to this large movement in the market. And that is also tied into the equities market performance, because if foreign investors can now come out of the market and see more liquidity to come out of the market, that may exert pressure on the equities market. So overall, what you're seeing now is the government being able, or the central bank having now seeing that it has the capacity to now reduce some of the latent demand and increase the dollar liquidity in the overall market.
Outlook for the Naira, going forward, like short term?
I mean, over the short term, there are significant pressure points, undoubtedly. However, we are of the view here that we will not see a significant movement in the overall INE window rates towards the end of the year. We are still looking at a rate of around 450 Naira per dollar by year end. That being said, the pressure points right now are quite significant, and you can see that in the parallel market above all, where rates are closer to 500 Naira now. That is on US dollars now.
And was the adoption of this NAFEX rate as a new official rate signal to the market? When can we expect that the parallel market and the NAFEX rates will unify?
I mean, the unification of it's still a long way away. We have a lot of structural issues to deal with in Nigeria to get to the point where both markets are not so far away. Structural issues that obviously take care of US dollar liquidity, and I mean these are issues that we've been talking about for years, and they need to be very, very measured plans that get us towards that point. But for now, looking at the adoption of the INE or the NAFEX rate, it's a positive in that investors or foreign investors see it as a more market reflective rate as opposed to the interbank rate that is usually touted, which is around 379 on the official rate. So the NAFEX rate is supposed to, or NAFEX fixing is supposed to be a more market reflective rate. And so the adoption of that rate by the CBN is positive, not only for Nigeria's finances, but for foreign perception about the currency. And so it's positive. However, with regards to unification, we are not yet at the point where we're going to see a sustained unification or a close merging of the rates between the now official and the INE and the parallel market rates. There will be pressure points that will come from time to time that will cause a divergence of those rates as long as the overall structure of the economy remains as is.
All right, so with all of this, INE and NAFEX, do we see it solving some of the issues, you know, with the access to foreign exchange, manufacturers are complaining and all that? You see it solving the problem, even if it's in a small degree?
I mean, it's a definite positive, undoubtedly. The idea or the major positive that will come from this is that you start to see a lot more foreign participation, foreign inflows, given that they believe the market is more, it's more market reflective. And once those kind of flows start to happen, then you start to see obviously greater supply for the domestic leg. But however, for now, you're still going to have the CBN having to be the major supplier in that market, especially with the perception that foreign investors have of Nigeria at the moment. I mean, given some of our own conversations, a lot of foreign investors are not happy about the fact that in the space of 5 years, they've been locked into the Nigerian market twice due to significant dollar liquidity. And so you're not going to see a significant drive from foreign investors coming to this market until there's a sustained level of liquidity in the FX market and confidence that it can sustain over a long period. So it will be positive over the long term or medium to long term, but for now, we may not see those gains immediately.
All right. Thank you so much for sharing your thoughts with us this morning on Business Morning. Jolomi Odohanro is the Head of Research and Strategy at Quadra Securities Limited. Thank you so much, Mr. Odohanro, and enjoy the rest of your day. Well, we move over now to Will. Like we touched a little bit of it, but Will, a patch of green at the equities. I'm sure you're very happy about that.
Yes, thank God indeed. The market closed yesterday very bullish. So let's look at what the numbers are telling us. We can see that the all-share index was up 0.18% at 38,482.52 points, while the equity cap was at 20.058 trillion naira. And also to the activity chart, we see that volume, there was a decline in volume, value, and deals as compared to yesterday's, the previous session. But value, the volume, Japan Gold was the most traded stock by volume, while UACN was the most traded stock by value. Over to sectorial performance, we see that yesterday, if we observed in the last previous session that insurance was the lone gainer, but right now banking and industrial goods are coming up in the green, but consumer and oil and gas counters are in the red. Over to the unlisted markets, the NASD and the market cap closed positive at 0.12%, while the market cap was at over 538 trillion naira. We see that the gainers in that session was the Niger Delta Exploration and Production PLC, while the top loser was the Nigerian Stock Exchange share price, which closed at about 20 naira. We look at the volume. The volume was at 4.07 million units. Value was at 27.90 million naira. And we had all traded in 28 deals. We move over to the fixed income section, and we're talking about the bonds in the market there. We're seeing that the bonds prices are rising and yields continue to drop across all segments, and the market remains bullish. Investors are buying more mid-term bonds, and the market will remain. We pray the market remains that way. Now, over to Nigerian Treasury bills. For the Treasury bills, we also see a drop in the yields as more investors are demanding longer dated bills. But before we continue with the fixed income market, I want to talk to the stockbroker Richard Akimolado, a brokerage analyst at CL's. I want to talk to Chukwudi. I want to talk to Chukwu Emeka Chukwudi Nwaokeke, Chief Dealer, FSDH, sorry about a merchant bank. Good morning, Chukwudi. Welcome to the show.
Good morning. It's actually Chukwudi Nwaokeke, FSDH Merchant Bank.
Okay.
Yes.
Great. This morning, we want to talk about what's happening in the fixed income space. We see that there's nothing much happening as investors are being cautious, and we know that the OMO market is going to take place today. What are your expectations from the OMO auction, and what really is the appetite of the market for investors, or for investors for the OMO bills?
Well, we've seen quite not a lot of activity in the market this week for fixed income. There has been some demand for the bonds market in the mid-tier of the curve. We've seen some demand there. For the Treasury bills, we've also seen a little demand. However, it's been at the long end of the curve. That's where we've seen increased activity with some counterparties coming in to buy at the long end. This has been boosted by some liquidity that came into the system this week. As of yesterday, the market opened about 157 billion up, which led to some buying in the market. As the market stands, we expect that to continue today, although the CBN has come out today to give us a notice for OMO auction. A total of 20 billion will be offered across 3 tenors, 89 days, 180, and 348 days. The results will come out in about 3-4 hours, and that would also help us give some direction to the market.
That's very good to know, Richard. So, but knowing all this, what's your outlook for June? Do you think it's going to remain? Are we seeing more inflows, especially from the FPIs? In the OMO market?
I don't think anything major will happen this month. We look forward to July, more like I expect a sort of a quiet month for June. Inflows are not expected to be that much this month, and that's why I said that it's probably going to be a bit quiet for the month of June. On Tuesday, just 55 billion matured, OMO bills matured. That hit the system. So the volumes are not so large, and that's why so much activity won't come in, except we see a huge influx of cash into the system, which will now drive demand and rates down. Apart from that, we are looking forward to July, where we expect the more activity to pick up as some huge maturities will come in.
Thank you, Chukwudi Nwaokeke. That was Chukwudi Nwaokeke from FSDH Merchant Bank. So, Ladi, what do you think? What do you expect for this month? Do you think the month will continue on a bullish note?
I was kind of sad when Chukwudi said he doesn't expect much this month. I mean, this month has just started. And if he says, oh, he's not expecting much this month, he's jumping over to July. We still have, I mean, today is just the 3rd. We still have over 20 days, 25 days this month. 27 days more this month. I mean, what am I going to do? Am I just going to wait for July?
We'll only wait and see, I guess.
I believe so. I believe, as usual, we just have to wait and see and expect that we'll have the best, or hope for the best. Well, thank you so much, Will, for bringing us up to date on activities in the market. We'll take a short break now. When we come back, we'll head to London. Welcome back. You're still watching Business Morning on Channels Television. We head over now to our London studios, where Juliana is standing by to bring us updates from the UK. Good morning, Juliana, and welcome to the show this morning. Well, with seems to be more threats to the Freedom Day, June the 21st. There are talks on likely changes to travel lists. What have you heard about this?
Well, what we're waiting on is the government to announce a review of, well, it's a highly anticipated review of the controversial traffic light system. There are currently about 12 nations dotted across the world that British holidaymakers can travel to and not face isolation on the way back. Portugal has been one of those, which is why thousands of British fans were able to enjoy the Champions League final, go there and come back and not self-isolate. Well, there are concerns that Portugal may indeed today be removed from the green list or be placed on some sort of watch list. We'll have to wait to see what the Transport Minister, Grant Shapps, says about that. But Prime Minister Boris Johnson has warned holiday makers that the decisions made are being made under very severe caution, because of course we know there are so many new variants that are springing up and down, and he doesn't want to jeopardize the proposed unlocking on the 21st of June. So don't be surprised if sometime next week, my background is somewhere in the Cayman Islands or in the Caribbean, because the suggestions are that they will be put on the green list sometime later today.
Oh, wow. That would be great for you. I wouldn't mind talking to you from there. Anyway, the G7 leaders are meeting in Britain later this week to discuss the U.S. global minimum tax proposal. Any ideas, the direction of the talks?
Yeah, well, G7 kicks off in Cornwall next week. This is going to be a huge international summit of the wealthiest nations across the globe. First time that Boris Johnson will be putting forward a post-Brexit Britain stance. There will be lots of other meetings that are taking place on the sidelines. One of them will be taking place tomorrow. Rishi Sunak, the Chancellor of the Exchequer, will be hosting finance ministers. And of course, on top of the agenda is this corporation tax, which has been put through by Joe Biden's administration. I believe they were mulling around the 21% idea. That seems to have been reduced to about 15%. And it comes amongst this global row about digital tax. Lots of European countries, including Britain, have been putting up the tax for lots of Silicon-based companies, Silicon Valley-based companies that are doing exceptionally well but are paying lower tax. Now, the US have said that they will be retaliating and putting levies on exports or imports coming into the UK. One of the ways to mitigate against these tit-for-tat tariff wars is by agreeing a minimum rate corporation tax to stop these countries, hiding money in other nations. So that's what's going to be on the agenda tomorrow. And of course, that's going to set the pace and the tone for next week's discussions.
And post-Brexit impact is still being felt. Food prices are set to soar. For instance, M&S expects to pay between £42 million and 47 in additional costs this year. Any plan to cut this red tape that's causing this?
Well, it depends. These discussions are really later trends. At the moment, according to the British Retail Consortium and the data that they released yesterday, Britons are paying much less for their food at the moment. I believe in the month of April, food prices were down by about 0.3%, following a 0.6% fall in the month of March. So at the moment, consumers are getting the best for their money. But of course, we have been seeing that, there has been a rise of inflation in most parts of the world. Shipping prices are increasing, and the BRC chair does warn that this is going to slowly start trickling down into households. But this is just fear and warning, because at the moment Britons are paying much less for food in their shopping trolleys.
All right, thank you so much, Juliana. Enjoy the rest of your day, and I know you'll be set by afternoon. So we move over now to the Crypto Corner, and Laddie, what news do you have for us today?
Well, the NGX was in the green yesterday. Let's look at the crypto market now. Also green. Bitcoin, $38,793, up about 4%. We have Ethereum here, up 5% this morning. So altcoins are doing well, gaining in sats, also gaining in US dollar. Bitcoin is heading for that 40K. Let's see if it's going to surpass it this time. Total market cap, $1.7 trillion traded this morning, up about 6.66%. 24-hour volume is up to at 10.68%. And we have the Bitcoin dominance still going down at 0.3 5%. Price of Bitcoin, 38,009, up about 6% this morning. 24-hour volume of Bitcoin traded at 8 a.m. $36.10 billion traded. Let's look at the charts here. We see that bullish MACD cross on the one-day chart. It did cross yesterday, and we're seeing that histogram build up there. So we're heading for that 200-day moving average. We'll see what happens when it hits there. It's either going to come back down or go above it. Let's talk to Solomon Amunde now, digital market analyst. Hello, Solomon.
Hello, good morning, Lardy. Good morning.
Good morning, Solomon. So there's reports of a well-organized attacks on Binance Smart Chain. You know, I think Burger Swap lost about $7 million. What's happening?
Yeah, actually, Binance Smart Chain is still like a new blockchain, and we have so many DeFi platforms running on it currently. And we have this new trend in the DeFi space, which is referred to as flash loans. So most traders and developers that understand the core fundamentals of DeFi and how most of this platform works, like Bunny Swap and Bunny Finance that was hacked, most traders that understand this, they make use of flash loans to exploit and make huge returns from these platforms. And it's pretty easy how they do this. Flash loans, they help you borrow huge amounts in one transaction. You can borrow about $5 million to pay back with no collateral. Now imagine when you take out a loan of $5 million as a flash loan with that and you use it to trade in a decentralized exchange. You can easily manipulate the price and do what we refer to as arbitrage trading. And with that, make huge returns. This was how Bunny Finance lost about $7 million late last month, and about 3 days ago, Belt Finance lost about $6.3 million. So that's just what they are doing.
So who's losing here? Is it the traders or the exchange itself?
Okay, the thing that's losing here is actually the protocol that's offering the service. In the case of Bunny Finance actually lost because the price of their native token Bunny was actually manipulated and it was bought at a very cheap price. So they actually lost. And in the case of Belt Finance too, they lost because the way they calculate their collateral, it was actually being manipulated. And they actually lost about $6.3 million.
Well, with all these attacks, how do you see Binance actually, working to, block these loopholes?
Okay, Binance has actually made it very clear that the Binance Smart Chain is actually a decentralized blockchain. They can't call back the funds. They can't do anything. And whatever has been lost has been lost. It's not up to them. They are not directly involved with what's going on there. So Caesar, the CEO, has made that very obvious several times. And with respect to the DeFi system being still very much early, I would say it's only normal for us to see attacks like this. Like, this is not the first time. We saw 2017 what happened to Ethereum too, how much was lost in their DAO. So it's only normal. The whole ecosystem will grow, and these loopholes will be fixed within few years. So it's normal per se.
Okay, well, there's word on the street about Binance Smart Chain flipping Ethereum at some point. Do you see that happening anytime soon?
No, I don't see that happening because very soon Ethereum will be rolling out a new update this month or next, which should make Ethereum deflationary, and it will lead to the constant burning of Ethereum tokens, and that would send Ethereum to the moon, like over $10,000 this year per Ethereum.
All right, Solomon, thank you so much. Always great to have you on Business Morning. Thank you so much.
Thank you very much.
All right, Ini. BNB up 14%. ADA Cardano up 1.9%. Polkadot up 12.96%. It's looking good.
Yeah, looking good, Laddie. Better than last week when we had a sea of red, or streets of red.
Oh, yes. Blood on the streets.
I hope it gets better. Well, that's the much we can take on the program today. Thank you so much for watching Business Morning on Channels Television. I'm Ini John Mekwa.
And I'm Laddie Williams. Thank you for watching.